Hey everyone, welcome back to the podcast. Today we're diving into something a lot of you have been asking about, how to start investing in 2025, especially with just $100. It seems simple, but the options out there are endless, right?
Absolutely. You can put that $100 into stocks, crypto, real estate, and more. But the real question is, what's the best way to go about it for a complete beginner? Let's break it down, step by step.
First, let's talk about individual stocks. So let's say you pick a company you believe in. It's exciting, right? But it's not as simple as just picking any random stock. The learning curve here is pretty steep.
Right, you've got to dive into the company's fundamentals. Things like income statements, cash flow, and balance sheets. It's a lot more involved than you might think. For most people, I recommend starting with a demo account first, like on an app, so you can practice without the risk.
For sure. And when you own stocks, there are two ways to make money: price appreciation and dividends. If your stock pays dividends, that's a nice passive income. But tax efficiency, what's the deal there?
Great question. If you're in the UK, you can use a stocks and shares ISA, and in the US, there's something like a Roth IRA. Both protect your returns from taxes. That's a big win.
But don't get too comfortable. The risk with individual stocks, very high. It's like throwing darts. Sometimes you get lucky, sometimes you don't. I remember the dot-com bubble. Some stocks I invested in were worth nothing when the bubble burst.
Yeah, it's a roller coaster. So what's the $100 investment worth now, after 4 years?
Well, my $100 in Samsung stock is now worth $67.76. That's a loss of 32%. But imagine if I had picked Apple or Nvidia instead. Huge gains there.
Yeah, if you'd picked Nvidia, you'd be sitting pretty right now. But okay, let's move on to something a little different. Real estate investment trusts, or REITs.
REITs are interesting. You're investing in properties without actually buying one yourself. You're kind of like a shareholder in a big property fund. The learning curve is moderate, much easier than dealing with real estate directly.
And the best part? REITs pay high dividends, since by law they have to distribute at least 90% of their profits to shareholders. That's a nice stream of passive income.
But of course, there's some risk. A downturn in the real estate market could affect your returns. In my case, my $100 investment is now worth 98,059 san, but I made a bit back in dividends. So overall, I'm up 10.52%.
Not bad. Now let's get into the wild world of cryptocurrency. Bitcoin, Ethereum, all that good stuff.
Cryptos are exciting, but they're not for the faint of heart. The learning curve is moderate. There's a lot to figure out. You need to set up a wallet, pick an exchange, and understand the tokenomics behind it all.
And for passive income, it's possible to stake your crypto or do yield farming, but it's risky. If the price drops or the platform gets hacked, you could lose it all.
Taxes, though, crypto doesn't have the best tax efficiency. You can't hide it in tax-advantaged accounts like Roth IRAs, and even trading one crypto for another can be taxable.
But on the upside, my $100 investment in Bitcoin 4 years ago is now worth $652.24. That's a huge return, but as you said, it's volatile.
Exactly. Crypto is high risk, high reward. Now let's talk gold. Solid, steady gold.
Gold is like the old reliable of investing. The learning curve is low. You can buy gold bars, coins, or gold ETFs, but it doesn't pay passive income, so it's not for making money quickly.
Right, but it's great for wealth preservation, especially during tough economic times, and the tax situation is good, particularly with gold ETFs and tax-advantaged accounts.
Gold doesn't have the same growth potential as stocks or crypto, but it's safe. My $100 in gold is now worth $140 tenors, a steady 40.1% return over 4 years.
Solid growth. Lastly, let's wrap up with index funds. For most beginners, these are probably the best option. Low learning curve, low risk, and generally solid returns.
Exactly. With index funds, you're investing in a basket of stocks. No need to pick individual winners. They're perfect for long-term growth. Plus, you get some dividends and they're tax efficient if you use the right account.
And for risk, it's low because you're diversified. My $100 in an S&P 500 index fund is now worth $199.57, a 79.57% return. This is why index funds are a favorite of mine.
Yeah, they're simple, reliable, and perfect for building wealth over time. I think everyone should consider putting a chunk of their money here, alongside some riskier investments.
For sure. The key is balance, having a mix of assets to grow and protect your wealth. So whether you go for stocks, REITs, crypto, gold, or index funds, just make sure to start early.
Exactly. Even small amounts like $100 can grow into something big over time. The most important part? Getting started.
That's right. Well, that wraps up today's episode. Make sure to do your research before diving into any of these. Catch you in the next one.